Welcome everyone to this video done by Real Life Trading. My name is Brad Reed, and I got a couple of questions about how to begin trading. And there's a strategy that I like. I call it the 5-minute reversal strategy. This is being recorded in a live day trading room, and we do have a position open on Wendy's. Right now it's not looking so good, but hey, if you see videos from a trading firm and they only talk about their wins, you should be on high alert. Anyone open to showing their losses, that's probably an honest team. I hope I'm honest. Anyways, Fossil looking good for a bearish break. A couple of things we have our eye on. We got in on True this morning, but exited for break even. So a lot of folks have been asking me, Brad, what if I want to quit my job and become a day trader, what should I focus on? And I think the easiest and perhaps even the most profitable strategy I call a 5-minute reversal. So I'm going to talk about the strategy, show you a couple of examples. Unfortunately, most of the examples are going to be bearish because when I day trade, I trade mostly in the bearish direction. There will be some bullish trade setups in here, but let's get to it, right? If you are a new trader or if you are new to the strategy, I highly suggest that you trade this at least 50 times virtually just to see that you can do it. Of course, you can back trade it, which means you pull up some stock charts and you go back in time to see where the strategy would have triggered and how many times it would have worked. So be sure that you do back trading. Be sure that you do virtual trading. And I guess while I'm here, let me go ahead and just show you our website. So if you want to see more free stock trading videos, you can come over to reallifetrading.com. And right here is a ton of absolutely free classes. If you have questions, you can email me, Brad, B-R-A-D, at reallifetrading.com, or you can hit my cell phone, area code 512-296-8403, and that is in the United States of America. So the 5-minute strategy. When you have a stock that is gapping between 2 and 9%, like we see Bluebird Bio did on October 16th of 2016. This video is being recorded on February 16 of 2018. Sorry, my phone's just going here, and sometimes when I have a stock trade that's triggering my phone, will make noise like that. So you want to be sure you have a nice gap. And here on Bluebird, we had a bullish candle on October the 15th, and it gapped down on the 16th. And so anyone who had bought at anywhere through this consolidation period would be trapped. So that's why I liked the gap. It's very, very important to like the daily picture, because the daily picture tells me what to trade, and then the 1-minute, 5-minute, or 15-minute charts tell me when to trade it. And of course, the strategy is about 5 minutes. But when a stock gaps beyond a consolidation or beyond a pivot and has a reversal candle in the first 5 minutes, I trade the breakout or breakdown of that 5-minute candle. So in this case, this stock gapped down. So I would be looking for a bullish candle in the first 5 minutes. As you can see, we got that over here on Bluebird. The first 5-minute candle was bullish. So in the first 5 minutes, I placed my entry a few pennies below that bullish candle. I put my protective stop above, 1 penny above that candle. And in this case, I got 2R, so 2 times the distance from my entry to my stop to the target. And yeah, that's where I exited. And of course, along the way, I was able to lower the stop to this swing here so I could lock in some sort of gain. Then I lowered my stop some more, and I ended up exiting here just a little bit above the pivot. But again, the key on this trade was a nice gap down that cleared a pivot, right? Cleared the low of this consolidation. Looks like it made a pretty nice looking double top there. It gapped down, and then in the first 5 minutes formed a bullish candle. That's the signal. Entry is a few pennies below. Protective stop is 1 penny above. Exit at 2R or the next pivot. So that was Bluebird Bio on October 16th, 2016. Got a question here in the chat pane. Frank says, does it matter whether it's a gap and go or retest gap? For this one, no, it doesn't. Gap and goes are going to be a little bit stronger because they tend to run a little bit more. Retest gaps tend to retest a little bit more. If you don't know what a retest gap or a gap and go is, you come over back to real life trading and go to our free trading, and we will tell you what those gaps are, how to find them, and how we trade them. This is ticker BRX on August 11th, 2016. Same thing, we had a nice consolidation here. It gapped below that consolidation and also below that daily 20 exponential moving average. It gapped down, so I'm gonna be looking for a bullish candle in the first 5 minutes, and you can see that's what we got. This dark blue line right in through here is the daily 20 exponential moving average that I just drew on there. So I knew where that would be on the daily. I was hoping that would act as resistance to help this trade go down. That was the entry for that, and then this is the result. So this one went really, really fast, which is always nice. But again, a strong gap down on the daily, cleared this support below the daily 20 exponential moving average. We got a bullish candle in the first 5 minutes. The entry was a few pennies below that bullish 5-minute candle. The protective stop was above that 5-minute candle, and we exited all at 2R. And again, 1R is the distance from the entry to the protective stop. Double that, and that's where we set our target most of the time. So in these first two examples, the target was above the pivot. That's where I like them. And all my trades, I draw the next pivot. You can see that one there. And let me get that off the list. Here is another one. This one is Facebook on April 22nd, 2016. And that's going to get me out on Wendy's. So for those of you in the Wendy's trade with me, I am out for a small loss. Shaz in the chat pane says, is this a 5-minute chart? Yeah, I'm toggling between 5-minute charts and daily charts. This is a daily chart. You can see that D right there. And again, this is back in 2016, right? So for those of you watching the video, this video is being recorded on February of 2018. So a long time ago, but I still have the pictures. So not as significant of a gap as we've seen on some of these others, but it did have, looks like a doji and then a bullish candle. We gapped below that. But I think I like this one because we got below the those exponential moving averages, below the 10 and the 20. Excuse me. I expected a bearish run down into that 50 exponential moving average. Here on the 5-minute chart, we opened with a bullish candle. And again, I've got a daily moving average between my entry and the stop. I like that. And yeah, the trigger was a few pennies below the 5-minute bullish candle. The protective stop was 1 penny above it. And my target down here was 2R, which is right about where that daily 50 exponential moving average is. If you have questions about this in the chat pane, go ahead and type them in. This is one we did not too long ago, oh, like 2 days ago. So this is February 14, Valentine's Day on 2018. We had a nice consolidation here on Avis rental car. It gapped down. And so the arrow shows the candle that I was watching it. And in the first 5 minutes, it formed a bullish candle. This one took a while. So my protective stop was actually, I lowered it from the high of the day down to this minor consolidation. But you can see that once it triggered, it started wiggling. It didn't really run. So I was able to lower the stop. Now, instead of losing a full R on this, I lost like 1/4 of an R. And do I have the rest of the day? I don't. The rest of the day, this thing ended up going back up and sideways. Oh, in fact, I just, here, we'll watch it. CAR, it was this candle right here. So you can see that it opened down here and traded up the rest of the day. So we did lose on that trade, but that's how I would have traded it. Notice the target down here right there above the next pivot. So that was a loss. Now, I know I have a bullish example. Here it is. Intel, this was January, is that 16? Oh, no, that's when I did the picture. But this trade was January 27th, 28th. I think it's January 27th, 2018. So this is just a month ago. And in fact, we did this when we were doing our free webinar. So we had a little over 300 people do this trade with us. A lot of people paid for 1, 2, 6 months, some folks even a year of our webinars with this. Again, the educational videos are all free, but if you want to watch us trade live with our own money, then that is a fee. You can click on the premium tab on our website and find that. But at any rate, we had a bullish gap, a nice gap and go, right? The day before was bearish, we gapped up, and it cleared this old resistance, which we were expecting to be new support. Now this was the all-time highs on Intel, but yeah, a very nice gap, had a bearish day, so it was a gap and go. To me, that gives a little bit more strength. And it, yeah, so let's go take a look at the 5-minute picture. You can see in the first 5 minutes, it formed a doji. So would have preferred this to be a bearish candle, because again, after it gaps, I like to see it reverse for the first 5 minutes. And, but it formed a doji, and we traded it bullish, and we exited all at 2R. So again, the entry was about 3 pennies above the high of that first 5-minute candle. The stop was 1 penny below, and yeah, we got 2R on that one. So that's how I trade that one. If you are new to trading, or if you're new to that one, back trade it first, which means go back in the charts and find examples of where a stock gapped and cleared either a support or resistance. Then take a look at the 5-minute picture and see if it formed a reversal candle in that first couple of minutes, and then write down if you would have won or lost on this stock, on that trade, and do 50 or 100 and see how you're doing. Once your back trading is proven to be successful, then try some trading with a very small amount of real money, and yeah, day trade it in real life. Kim says, will this work for lower price stocks? Yes, I do not trade stocks below $5, but yes, I have done this strategy with you know, with stocks that are just a little bit over $5. Love the strategy, one of my favorites, and it's super easy. I've had a couple of folks say, Brad, I'm a stay-at-home mom or a stay-at-home dad. What strategy would you recommend? I would recommend the 5-minute strategy I just talked about in the video. I had someone recently say, hey, Brad, I want to trade in the morning, but I have to go to work, so I only have about 30 minutes after the market opens. Bam, perfect strategy. Of course, a lot of folks today said, Brad, I'm very new to trading. What would you recommend? I'd recommend this 5-minute strategy. Jaden says, do you only use the first 5-minute candle? Yes. Well, no, I mean, I look at the daily chart. Sorry, that's the doorbell. I look at the daily chart, and I want to make sure there's a very nice gap, like there was on Intel not too long ago. Here's Intel on the, that's not the daily picture. Oh, that's INTC. So I want to make sure it's a nice gap. I start on the daily chart, and then I switch to the 5-minute chart. And that's today. I got to go back to the day. Ooh, there's another gap. I don't know the quality of this gap, but that one would not have worked out. The important thing is when it doesn't work out, you never lose more than 1R. But again, the quality of the daily chart is going to be the most important. Let me get back to January 27th, which is when we did this trade. There we go. So again, the magic of this trade was that the daily gap was so nice. 5-minute candle there. Now, as this stock moves, you can, of course, raise your protective stop, right? Lock in your gains so you don't lose any. But yeah, look at the 5-minute candle. Now, if you have to go to work and you only have 30 minutes, great. Raise your protective stop to break even. And then while you're at work, one of two things will happen. You'll either hit your target or you'll hit your protective stop. That's fine. But yeah, I do not use the 1-minute chart when I am trading this strategy. There is someone at the door that is persistent. Sorry about that. Of course, things like that happen when you're recording a video, right? Are there any other questions for people in the chat pane? Chief says, where do we get the recording of this? Chief, give me time to download it and upload it. It will be on YouTube here momentarily. I will definitely put it in the I will put it in our Slack. So for those of y'all that can see the trade setups, I'll post it there. I'll also send it in the email that goes out this afternoon after the afternoon recording. So you'll have 3 different places to get it. It'll be on YouTube, it'll be on Slack, and it'll be in the email that we send out this afternoon. Folks, thanks for watching this video. If you have more questions, come over here to Real Life Trading and check out our free videos. You can email me, brad@reallifetrading.com. And if you don't mind, give this video a thumbs up, give us a like. That really helps us out in the long run. Appreciate it. And until I get to trade with you again, trade on logic, not on hope. Have a good one, everybody.